Dzień dobry Państwu.
Good afternoon, ladies and gentlemen. Welcome at the information from the meeting from Monetary Policy Council. Professor Adam Glapiński, Governor of the National Bank of Poland and the Chairman of the Monetary Policy Council. Professor Jerzy Osiatyński. Mr. Governor, the floor is yours. I'd like to inform you that Professor Osiatyński, who is present at this conference, is slowly finishing his mission at the Monetary Policy Council. It's his last press conference that he's participating in, and of course, we are greatly moved by this. The whole council is moved. I'm very grateful for the opportunity of participation with Professor. It was a very interesting experience, a nice one, and even today, this participation discussion will be very interesting. I'd like to present the information from the meeting of the Monetary Policy Council held on the 3rd and 4th December 2019. The Council decided to keep the Nbp interest rates unchanged, and so the reference rate at 1.5%, lombard rate at 2.5%, deposit rate at 0.5%, and rediscount rate at 1.75%. Global economic growth remains relatively low, and uncertainty about the global outlook persists. In the euro area, economic activity growth remains slow alongside the ongoing downturn in industry. In the United States, economic conditions continue to be relatively strong, although like in many other economies, industrial activity is declining. In China, economic activity growth continues to slow down. In these conditions, inflation in many countries is running at a moderate level, and in the euro area it is low. The European Central Bank is keeping the deposit rate below zero, while conducting asset purchases and signaling the maintenance of loose monetary policy in the coming quarters. After interest rate cuts of recent months, the US Federal Reserve is keeping the rates unchanged. In Poland, economic conditions remain good, despite slower economic growth in the third quarter of 2019. GDP growth is supported by stable consumption growth, fueled by favorable labor market conditions, very strong consumer confidence, and social benefit payments. Investment continues to rise, albeit at a slower pace in the third quarter of 2019. At the same time, the contribution of net exports to GDP growth remained positive in the third quarter of 2019. According to the GUS flash estimate, inflation stood at 2.6% in November 2019. Inflation is driven up by elevated food price growth, while being curbed by lower than a year ago energy prices, including fuel prices. Alongside that, core inflation, after a rise in recent months, has remained moderate. In the Council's assessment, the outlook for economic conditions in Poland remains favorable, and GDP growth, despite the expected decline, will continue at a relatively high level in the coming quarters. At the same time, there remains uncertainty about the scale and persistence of the slowdown abroad and its impact on domestic economic activity. Inflation, after a temporary rise in the first quarter of 2020, will stay close to the target in the monetary policy transmission horizon. The Council judges that the current level of interest rates is conducive to keeping the Polish economy on a sustainable growth path and maintaining macroeconomic stability. Thank you very much. Thank you, Mr. Governor. Ladies and gentlemen, you may now ask questions. Good afternoon, Renata Orgiasz. I have a question about the scale of the slowdown of the economy in third quarter. We do see, however, a weakening of consumption in Poland and also slowdown as regards dynamics of investments with comparison to the previous quarter. Is this a kind of forecast that this period without changing interest rate might be shorter and might go into the direction of decreasing the interest rates? The shorter version of my answer is the following: no. But if I may elaborate on this, it's as we foreseen. There might be some minor changes with regard to the November projection, but the growth rate is decreasing, but it still remains excellent. The growth rate, around 4% of GDP, is a very good result as compared to Europe, compared to our potential growth that we have, and compared to the situation in the world. It doesn't disturb us. The growth rate is a bit lower. The inflation is temporarily a bit higher. It's nothing to be concerned about. Just as I say, since I am the governor, it's very probable that the interest rates will be unchanged. Nothing will change. Good afternoon, Dorota Bartezel, Bloomberg News. I have a question regarding not the level of economic growth as such, because we know that at 3.9% rate we remain a leader in the world, but I'm a bit surprised by what I'm reading in the communiqué. You are mentioning the quarterly data. I am surprised by lack of commentary regarding structure. The entire market was unanimously disturbed by the lack of expected growth as regards the rate of individual consumption. The entire market indicated to disturbing lowering of investment dynamic, and at the same time the data regarding the third quarter, in view of their structure, served as a material for many centers to revise the GDP of the entire year, and they decide to lower it. I think they are mistaken. I would like to know how is it possible that the National Bank of Poland is still consistently, stubbornly indicating, pointing out only to external factors as responsible for the downturn. That's my first question. That's directly related to today's communiqué. And my second question, a month ago, we acquainted ourselves with the projection, and in each subsequent issue the list of risks is shorter and shorter, and there are virtually no negative risks stemming from our national situation. In this November projection, all the analysts, or the entire department of analysis in the National Bank of Poland, indicated only the risks related to the downturn in world economy. Does that mean that the Department of Analysis completely overlooked the risks that are in Poland?
The short answer is yes. Our analysis and our projections have transpired to be the best thus far. Let's stay on the Polish ground. Thus far we were right and not the analysts. And this time I believe it will be the same situation. The decreasing of our growth rate is due to the decrease in the growth rate in Germany. And, well, it would be surprising if our growth rate would not decrease if it has decreased in Germany, our partner, our neighbor. This time our GDP, our economic activity, has decreased to a lesser extent than it would follow from the decreasing of the economic situation in Germany, especially the Polish export. The Polish export has very good results, taking into consideration that in our main partners, the economic situation is much worse, and our export is in a very good situation. So the reasons are external. There is no reason inside Poland that would influence the decrease of the growth rate. Well, nothing has happened like, for example, the shortage of workers in Poland. But investment, public investment has decreased. Well, Mr. Governor, perhaps someone understands it better. I don't. How could GDP become weaker due to the external reasons if this was the next export that added to our situation? Well, the decrease of our situation is connected with the situation in Western Europe, especially in Germany. In the previous cycles, there was a closer link between Germany and Poland. Approximately after 8 months, the decrease has happened. Right now, we don't react so vividly to the situation in Germany, which shows the growing maturity of our economy. Perhaps Mr. Professor would like to add a few words. Good afternoon, ladies and gentlemen. In order to supplement the previous words, I would like to say that over many quarters and years, we have not observed the economic situation cycle in Poland. Right now, we can see some weakening of investments that you have mentioned. The weakening partly is due to the weakening of the public investment. These are self-governments, but not only them. We have to remember that it can translate to the situation in the next year due to the situation with expenses and the space in public investments. Well, what's happening with private investments is quite concerning, and the question arises because this is what you've started with. You've started with the question whether the Council does not take into consideration the decrease of the interest rates. This was your initial point, and the issue is that investments of huge enterprises are financed, as a rule, with funds outside the Polish banking sector. And as far as investments of medium and small enterprises are concerned, to the extent they could be financed with bank loans, there is no shortage of financial means. There is no lack of availability of loans, and this is not the reason for the shortage of investments. The reason for which those private investments are not as good as we would like them to be do not depend much on what's the mandate of the monetary policy of the National Bank of Poland. In the whole Europe and also in Poland and globally, the consumption triggers the global growth, economic growth. If you look at the difference between the cost of investment loan in Poland and in the countries of Western Europe, there, the cost is even lower. Sometimes they have negative interest rates, even more negative than in Poland, and they don't have investments. So it has to be explained, but it doesn't seem that the remedy can be found in the instruments of the monetary policy. I would like to emphasize this. As we were gathering information last week, it's positive. In Germany, there was no recession. Everyone was expecting this here, but it transpired that there was no recession. We have just slowed down, and they had positive growth, 0.5%, and the presumptions of the German government are that there is stabilization on this level, and slowly the economic situation will be improving. This is a very good information, especially for Poland, because we were concerned with the fact that Germany would enter into recession, but they have stopped at the level of 0.5%, and after a longer period of time, they are starting to grow. And it means that in Poland, the economic situation can improve as well. Nevertheless, we can see some decrease of growth rate in the next year. Rafał Tuszyński, Polish press agency. I would like to ask about the market assessment of interest rates. It's approximately 25 basic points. Is this prospect real that at the beginning of the next year, the interest rates would be decreased? Mrs. Bartyzel asked about it before. I don't presume that the interest rates will be decreased. Since the last meeting, there were some voices that spoke for it. I can speak about it right now. Well, the discussion is always interesting, and since last month, it has been even more interesting, and there are more and more interesting analysis that we are discussing, and there are different positions that and there are arguments presented from both sides, and we had a lot of information that was additional from the economy, and it was prepared by the bank, and the discussion is interesting, but there are no significant decisions or suggestions. If the projection transpired to be realistic or close to reality of the economic situation, then the interest rates will stay unchanged. As per 10 members of the council, some decisions may appear, but as you follow private analysts and their statements and the expectations of the market, there are some expectations of some that perhaps there will be some decrease or increase, but in general, the market does not expect any changes to the interest rates, including foreign investors. They do not expect any changes. Professor Górzyński mentioned that if there was a deeper slowdown, the decrease by 50 points would probably help. Members of the Monetary Policy Council, they are free to speak out their minds and to express their statements. But there is a discipline of thought, some pragmatism, the exchange of opinions, and this is how it forms. We have 10 members of the Monetary Policy Council so that it can form the final decision. And that's why the decisions of the Monetary Policy Councils very rarely transpire to be wrong. And I can say that this is my second term, and it helps, and we don't take any decisions just out of a sudden. So what's the space for the cuts? And the space is, as you see, we have positive interest rates. Unlike in the Western Europe, we can make our decisions not only to decrease, but also to increase. We have this freedom to change the interest rates, but there is no need to do so. If I could add a few words, the answer from my point of view is negative. to this question, because in order to be able to presume this perspective that you have mentioned, we would have to take into consideration in our analysis that the scale of the slowdown would be much bigger than it follows from the recent projections. And we do not expect that the rate will be much bigger. That's why there is no reason to think about the decrease of interest rates in the nearest future. Right now, we expect that the interest rates will be stable and will be kept on the present level.
Professor Szatyński? It's very difficult to conduct any economic, when you conduct any economic policy, to see it so long-term. Of course, we should consider the long-term effects of the decisions that we are making now. But truly, using a horizon of 6 to 8 quarters, it does not seem that Poland is threatened by such a weakening of the dynamics of growth that will require any radical changes to the interest rates. What is more, I will refer to what I've already said when answering the question of Mrs. Bartyzel. It is about whether truly a lowering of the price of loans will result in entrepreneurs who, at least as far as the big international corporations are concerned, they generally have access to definitely cheaper loans in the mother companies, that they will increase the investments that they have planned. So it seems to me that we are rather in a situation where we've been using a sort of a margin of quite a significant difference between the level of Poland's development and the average level of the EU. And in this process of keeping up with it, we could have it. And I hope that we keep having them, these favorable interest rates, as long as possible. And this process, in the course of time, will naturally be exhausted. And so a question arises, what is the normal? I don't want to use the term natural. The rate of technical growth and the rate of labor efficiency growth in Poland. Again, remembering about the fact that there is a quite discrepancy between the average level of labor efficiency in industry in Poland and in foreign countries, there is still some kind of margin of differences, but it doesn't seem that we are threatened by this kind of situation of quasi-stagnation, as we can see in the Eurozone or in the countries of the European Union, with some exceptions. Another question? At first, referring to what you said, Professor, that it doesn't seem that in the period of 6 to 8 quarters we are threatened by such a weakening of the economic situation. I understand that it's not only about the weakening of the situation, but it's also about the level of inflation growth, right? On the one hand, in the projection, we can see that this inflation is supposed to stay within the inflation target, and there is no agreement of how the target is understood. There is full agreement. I don't know, Mr. Governor, I don't want to argue with you, but I do speak with every member of the Monetary Policy Council. I know that they understand it as a range and as a concrete number. Okay, so to make the matter clear, the question is, what kind of inflation is it? Is it inflation that is driven by the supply, by the demand? Sorry. The basic indices will probably be maintained for the next several months and then will be slowly in decline. What's that about? These are administrative prices of services that the monetary policy cannot impact in any way, and other prices like excise duty. Other prices, it is inflation that is not driven by the demand, but it's inflation that results from the growth of controlled prices, either the ones controlled by the state, in the broad meaning of the word, central government and administration. So actually, what can we expect from monetary policy, the task of which is to react to these prices which are generated by the demand? If you take into account that this mechanism of translation of inflation to the inflation expectations regarding the future is based on the assumption that the tenders concerning prices take place on the basis of expectations related to the prices. But it's not like that in all actuality. It's an assumption that does not correspond to reality. In fact, in these tenders, you look to the past to regain the lost actual worth of wages. So the same mechanism of translation, the mechanism of transmission from inflation to the forecasted inflation is probably weaker than it is generally accepted. So if you take into account both these factors, then maybe we are not completely in the wrong. No. The inflation will remain low, close to our inflation target. This year below the target, and next year will be a little above the target, but it's nearly on target. Like 1 or 2 numbers can change. And the same regards to growth. It's 4 something, next year 3 something, close to 4. So what kind of intervention you mean? From our perspective, it's a perfect state. It's not like we advocate for any kind of intervention from the Monetary Policy Council. Something depends on the electricity prices for households. It's difficult to forecast what kind of decision it will be. But, Mr. Governor, we somehow lost the real interest rates on the way. We keep observing the real interest rates, as everywhere. But assuming that we announce that the cost of money will remain unchanged, and inflation next year in the first quarter or the first half of the year not only will exceed 3.5, maybe more. Who says that? Several analysts, or maybe those analysts will answer for this. You have to ask them. Like 2 years ago, Minister Emilewicz said that energy prices will rise by 5.7, and today we heard it will rise by 10% for households. Yes, for households. So you need to talk to her about it. I absolutely do not forecast this. I'm just saying that there's some risk of uncertainty. This is a responsible government, and surely it will not happen. The real interest rates remain on negative for the longest time, as in the entire Europe. Yes, but we do criticize this. We criticize what's happening in the whole Europe. Why? We've always had conventional policy, right? These are sensible people in the European central banks, and they conduct a sensible policy. But they have to apply more unconventional mechanism because they have a worse situation with regard to inflation, deflation, they have no space to lower the interest rates. They can only increase them, and we can both increase and decrease them. So when you talk during your meetings, what about the demand for consumer loans, assuming that society, consumers in general, they know that interest rates will remain unchanged in the perspective of rates. Thanks to the fact that they do know it, they have this sense of stability, they can provide for the situation and so on. Of course, the opinion of each member of MPC may be different in this respect, although we have the same data. From my point of view, and the majority of the Council, there's no reason to be concerned for any of those reasons that you mentioned. Banks want to provide loans in a sensible way. They have various restrictions and orders and indications from the part of the Commission for the Financial Supervision, and they give the loans in a sensible, responsible way.
And there's this uncertainty regarding the legal interpretations that pertain to the foreign currency loans. In my opinion, there is no risk connected with an excessive GDP decrease. From the point of view of the balance, we have an ideal situation in our economy. Mr. Toshinsky, I would like to refer to the Financial Stability Report published a few days ago, and there is a reference to the process of forced restructurization. Does the bank see the probability of this scenario, and can we exclude the situation in the future? Well, the point is that we do not prepare this report. It is the Financial Supervision Authority, and in the committee that we are participating in, this possibility of forced restructuring has existed for a long time. Perhaps it was in the past that we were close to making this decision, but we have not done it before. And perhaps it will appear in the near future or in the further future. This is a very good and reasonable method of stabilizing the situation in the case of a financial situation that does not cope with the situation. So if I understand it correctly, the report was to prepare the market for this situation. Well, I believe that the market is prepared for this kind of decisions, and it was envisaged by the market some time ago, and all institutions are ready for that in the whole Europe and in the whole banking sector. And this is the best method of overcoming some difficulties. But our situation is stable, although the profitability has decreased. But compared to the Western Europe, well, the situation is good. Well, the Polish banks complain that the profitability has dropped by half. But in the European Union and in the whole Europe, the situation is similar, and it's here it's lower than in the countries of our region, and before that it was higher, so the time changes. I would like to address the question to Professor Osiatyński. On behalf of the journalists, we would like to thank you for your patience and endurance and educational approach to us, because you don't have to be educated, right? Well, there are probably a lot of areas, and Professor has shown a lot of patience to us, and you had a privilege to take part in the Monetary Policy Council under the leadership of two governors of the National Bank of Poland from the period of the deepest deflation. Right now we are still within the target bound of inflation. Mr. Professor, what are your main thoughts regarding the state in which the economy is in right now? Won't you ask about gold? Aren't you interested in this subject? No, please. Perhaps I could say something about gold. Thank you very much for this question. I would like to say that those words of gratitude should also be expressed by me towards you. You were eager to listen to me, and many times I could read later on what you wrote, and I could see that you understood what I said, which was very comforting to me. If Mr. Governor allows, for 4 years, the Institute of Economic Sciences in Poland, which still operates, along with the National Bank of Poland, have had postgraduate studies here. And over those 4 years, I have taught more than 100 journalists, television and radio journalists, and many times when I hear what they are saying today, that I was trying to tell them that there are more than one book with recipes, so and they should use a lot of them. This was not my greatest educational success, but the experience with you, I will always remember with gratitude in my heart. Thank you very much. As far as the comparison is concerned, this is a different situation, and still, please remember that over all this time, I came to the Monetary Policy Council 6 years ago. What the economic dynamics was at that time, what were the main challenges standing before the Polish financial economy, and how we were trying to cope with them. And where are we today? Where the economic policy is today? This is not only the merit of the National Bank of Poland or the government, but mainly entrepreneurs and workers. Also, the period of good economic situation that is now weakening, but the weakening of the economic situation was emphasized by us even in the previous Monetary Policy Council, and Mr. Glapiński, who was the member of the previous Monetary Policy Council, also spoke about it, and remembers the discussions that we had at that time, and it was in a different climate, in a different atmosphere. It was a period of those 3 recent years that was very good, exceptionally good, in the meaning that it was a great stabilization. Despite all those threats, we didn't know what the result of some external factors would be, and all the time we could see those threats and the process of Brexit. We didn't know what the consequences would be, and Greece, Spain, Portugal, all those crises. Over all this time, there were a lot of question marks that we had, and we had to take them into account. We don't have them today. The situation is much more stable. The economic situation is much stronger. And you have mentioned, Mrs. Bartizel, that we have this expert access despite crisis. in almost all the countries of the Eurozone and the shrinking markets, what the geographical diversification has happened and the strengthening with a stable exchange rate of the Polish zloty and euro. It shows the strength of the Polish economic situation, the export companies, etc., etc. So we'll keep our fingers crossed that despite all those threats, that the conditions will be beneficial for the Polish economy and that they will be maintained and that we will not make any mistakes. And the last question, Mr. Governor wanted us to ask about gold. I like when you ask some nice questions and we can boast about something. A few opinions have appeared recently that it has no meaning. Well, and the vice versa, it has a great symbolic meaning. And please remember that we have not decreased any resources in the Bank of England. Previously, we had 100 tons, and there is 100 tons there, and even more. Right now, we have 123.8 tons. So we have increased the amount of gold that we keep in the bank. Over the 2 years, we have bought 20 tons, then 100 tons. Right now, abroad, we have 123.8 tons, and in the National Bank of Poland, in Poland, we have 104.9. So last year, we had 5,600,000. From the point of view of the central bank, this is not a significant amount. And in total, since 2016, it's 60 million. And it's only a part of the gold that we can locate, we can deposit. Right now we have an offer with a negative profitability, so we can trade the gold, but we will lose on the deal. So it's not that we lose something; we only get the profit. We are following Germany in this regard. Germany, Austria, and other countries that they have brought some part of their gold into the country, so that they would keep some part of it in their own countries, and it influences the perception of the central bank abroad. And we have observed the forming of the public opinion in Europe about what we've done, and it was very positive. In all the news of all the countries of Europe, they showed that the National Bank of Poland has increased its resources over twofold, and it was perceived very well as an increase of our resources. We have had some income, and we have bought gold. So we have some reserves in gold, which is the average in globally. In Europe, it's 20. So we have space to grow if the reserves continue to grow, especially after 2020. It's good to keep the 20% in gold. This is a very reliable reserve. Then you can see that the partner is responsible, is serious, that the economy is serious, and other countries are following us. And they have lower reserves of gold, but they are bringing the gold to the country. Slovakia is bringing its gold to the country. This is the global tendency, and the rating agencies want to see it this way. We are a reliable country. We have very huge reserves that we do not need right now, but a reliable country should have some reserves. just like any household, not to use them, but to feel comfortable, as Mr. Professor elaborated on the economy. And I can confirm it that we have an economic miracle in Poland. It will probably end sometime, but for many reasons, the eagerness to work and productivity of entrepreneurs brings results, and they do not lose the results. We don't have the status of anarchy that would waste the efforts of the Polish people. We have had a long period of time where the economic situation has grown, and we are approaching the level of Western Europe. It will take some more time. Still, we have 2%. Sometimes it's more, and the level of lifestyle of Polish people grows. Also, then banks, workers' wages was a point of interest last year, and there are different inspections, but the wages are growing, just like in the banking sector, but they are growing solidly. In Poland, they are growing. Right now, it's over 6%, and the minimum wages and the average wages. And what we are presenting today, the midterm of projection is still very good. The growth rate is 3%, almost 4%, and the inflation is within the target band. And it's a very good period, the year that is just finishing, and then 2020 and 2021. This is what we expect. We don't know what to expect later. And what about food? What the season will be. But food and the food prices are not growing, and non-food prices are decreasing. So this is an enormous situation, an incredible situation. This is the situation right now. And finally, I would like to wish you Merry Christmas and a Happy New Year, because we are not going to see each other, so that in your private life, in your family life, everything would be as good as in the Polish economic situation. And so we wish you the stability with a slight growth. If you are happy now, so that you would be even more happy next year. If you're less happy, we wish you that you will be happy as regards health and love. These are two very important spheres of lives, and that our country, fatherland, would develop well. Mr. Osiatyński, and it regards everyone, starting from Professor Osiatyński and finishing on a young journalist in this room. I would like to join the wishes, and I would like to express one more gratitude. Over the last 30 years, I was very lucky. I had a very good analytical apparatus in 1989. Then I had a very good analytical apparatus, the one that was transferred to the Ministry of Finances. I had a very good analytical staff, and the comfort, which gives the possibility of a longer-term horizon and thinking about variance, and not about the forced tasks. I am very grateful both to those who I have worked with in the previous term, and to those with whom I have worked in this term in the Monetary Policy Council. And I would like to thank you. You probably can imagine yourself that when you come here are some questions, here are some doubts, and sometimes you don't understand something. And they were also very patient, very understanding, and very well prepared. So it was a great satisfaction and it was a great pleasure. A job in the National Bank of Poland is a dream of every economist. This is what my father used to say. He has worked in the National Bank of Poland all his life and he really liked it. Thank you very much for your presence.